Hi, and welcome to another edition of TraderCast's weekly market report. From the economic calendar point of view or trading data point of view, all eyes are going to be on Janet Yellen's speech on Wednesday, 10th of February. She's due to testify in front of the Congress. That's usually followed by questions and answer session, and those kind of sessions are usually quite volatile for the markets, especially if you're exposed to a US dollar currency, or if you're trading dollar index, if you're trading dollar against other currencies, and if you're trading US equities and indices as well. In addition to Yellen's speech, closely watched data point is going to be European GDP, which is coming up on Friday, February the 12th at 9 o'clock in the morning. Okay, so let's start with a few financial instruments. I'll start with euro dollar. This is end of day time frame. We could see that euro dollar spiked into this falling resistance trend line. That's also a 61.8 fib retracement from this swing high, which is September of last year, all the way down to this November low. So a number of things pointing to a potential profit-taking zone. Also, most of the traders who were trading this on the upside traded this as a measured symmetrical move. So same number of points from this previous consolidation into this sideways move on the way up. So a logical profit-taking zone for anybody who was long euro dollar. So the levels on the upside, which could prove quite challenging to break out and offer some resistance, are at 112, followed by 112.50, 112.55, and 113.10. Alternatively, if this current resistance hold and we see a little bit more profit taking, then 111 followed by 110.55 followed by 110 would be logical downside supports. These extended levels for euro dollar are causing Mario Draghi a bit of a concern, and obviously all eyes are going to be on his rate decision in March, and most definitely for his press conference in March as well. So that's something that we have to look forward to. Obviously, bullish euro is not really good for DAX. This is a daily chart for DAX, or a German 30 index. You can see that it's a clearly embedded downtrend. These two previous lows would offer some level of support, but it does look quite bearish. So the initial support on the downside currently at 9,200, followed by 91.30 and 9,000. This is DAX futures, front-running futures month rather than cash. So please make sure that you adjust your price if you're trading any other financial instrument. Alternatively, if the current levels offer some level of support and we see a bit of a firming here and an oversold bounce back from these levels, but usually you would need to see a stochastics curling out from below, same as what happened here. So peak, this is pointing to another peak as well, would offer resistances at 93.11 followed by 9,400 and 9,500. This is end of day for DAX. Very similar situation with S&P 500. This is S&P 500's future front-running month. We could see that S&P reacted negatively to unemployment data from this swing low to this swing high, including the wicks. We are currently sitting at 50% retracement at 1871. Below that we have 1803, 1804, followed by 1855, 1850, and then 1836. So supports in this order. If you open this up in intraday, this potentially looks like a topping head and shoulder pattern as well. So yet again, we are currently sitting at this 50% fib retracement, but most significantly supports are at 1864, followed by 1849 half, 1850, followed by 1836. Alternatively, if the current levels hold and we see oversold bounce back to retest this previous support, now newly found resistance from underneath, then logical level of resistance is at 1900, 1900, followed by 1913 and 1926. Only a breakout and confirmed closure above 1926 would negate this current situation as a bearish outcome, and then potentially this 2000 might come in play again, which is the neckline of this longer term topping formation. But currently very, very bearish in multiple time frames. Gold end of day time frame. Yet again, this is end of day time frame. This appears to be a rounding bottom, so we can see a sell-off in equities and rally in gold. I had to kind of zoom out and use this current February 2014 high to current December 2015 low for a fib points, and that's pointing to a 50% fib retracement as well. But if I zoom in, and you can see that we have a sequence of high, lower high, and lower high, so that was the breakout. A point of control in the sense that bulls are in control above that level is 1160 with resistances at 1177, 1176, which is that fib retracement. Above that we have 1181 followed by 1186. Only a breakout above 1186 and a green candle closing above that current resistance level would open up the way for a potential move higher and the retest of further upside towards 1206, 1207. The other alternative is if the levels of resistance offer some profit taking opportunity for anybody who is currently long, maybe equity indices reverse from the oversold levels, then this would potentially pull back to retest that 1160 as a logical point of support. Only a loss of 1160 would change the view and then potentially target further downside support towards 1147, 1140 and 1134. The last thing that I want to talk to you about is crude. Guys, yet again, this is crude in end of day time frame. This is moving on rumors that Russia and Saudi Arabia will agree to meet with OPEC and non-OPEC countries and potentially put the floor under this commodity price or support the price by proposing a production cut by 5% by all of the producing countries. A tricky one. This is moving on rumors at the moment, but it's clearly defined downtrend. We have sequence of lower highs. The daily price is capped by this 20 periods exponential moving average or simple moving average if you use that. The levels that I'm closely watching are as follows. Initial support at 30.40. Yet again, this is crude front-running month. 30.40 would be a logical level of support. A loss of that level would open up the way for the retest of 30.30, which is a nice and round number, psychologically important. Below that 29.39, 29.40. A red candle closing below 29.40 would negate these oversold bounce backs and confirm the existence of this clearly embedded downtrend. The other alternative is only a bounce back of these levels and a breakout above the initial resistance, which is 32.46, 32.50, would spike into this 33.60, which is this falling resistance trend line level, and also very close to this 50 period moving average at 34.50, 35. So closely watched correlation between crude and equity indices. If we see a rally in crude, that was usually followed by a rally in S&P and Dow Jones. Pullback in crude was negative for the US equities as well. Guys, thank you for listening, and hopefully you've enjoyed it and found it beneficial. We've covered quite a few products in a short period of time. I'm looking forward to talking to you all on Monday for the members during the live trading events and a broadcast from 1:30. Alternatively, for the rest of you, I'll speak to you next week. Stay safe and enjoy your trading. Thanks for listening.